Hello, traders. It is Sunday, May 5th. Happy Cinco de Mayo for those of you who are celebrating. It's time for our weekly recording. I'm going to review the previous trades that I've done over the course of the last week, the stocks that I've highlighted. We're going to do some market analysis, and then we're going to find two new picks. That's the format for all of these videos. That's how you can tell that this system works. Please go back and watch my previous videos. Make sure that what I'm telling you in this video is accurate. So let's take a look at our last pick from last Sunday, APH. That was the stock that I highlighted. I love this breakout through horizontal resistance. We have lots of news coming up this week, and we'll get into market analysis in just a bit. I loved how steady the price action was. I loved the breakout after earnings. This stock continued to move higher. As I mentioned to you in that video, we looked at the option implied volatilities using our historical IV indicator. This was an opportunity for us to buy options. At the time, the July 21st 110 calls were somewhere in the neighborhood of $12.50, $12.80. I had suggested trying to bid buy these options somewhere in the $11.60 range to $11.80, looking for a little bit of movement this week, given all the pending news, a little bit of a pullback, try and buy them on any kind of pullback, and you can see that this is Monday, Tuesday, Wednesday. Wednesday, we got a nice little pullback before the FOMC statement. Trying to get in at 1160 or 1180, for sure you would have been able to buy that dip. That is also something that I advocate. You can see how those options closed 1350 by 1480. Really nice looking price action, and look at what the stock did on Friday. It's closing at a new relative high. Love it. I hope you got in on this trade. It looks like a really nice one. I also went through and did some analysis looking for longer term swing trades. AA was a stock that I had highlighted. That's Alcoa. We can see how that was the earnings announcement. Since then, the stock has been compressing in a nice tight range with fairly decent option implied volatilities. They had been relatively high. So we were going to sell an out of the money $34 put that expires in 2 weeks. So that was a May 17th option expiration. So let's go in and take a look at where those options are currently. And our thought was that we liked the stock. We felt that it was going to stay in that compression. We had a lot of news coming out in the marketplace, a lot of uncertainty. This particular stock had held the bid very well when the market had pulled back. So during this entire compression, the market had been pulling back. Incidentally, the very right part of the screen here is the S&P 500 on a daily basis. We'll take a look at that in just a second. The May 17th $34 puts that we could have gotten 55 cents for, we're trading 38 cents by 40 cents. This is a naked put rate with the intent of taking stock if it is put to us. So a couple weeks left in that one would generate a very nice return, somewhere probably in the 8 or 9% for a 3-week long trade. Very nice stuff. Wednesday, we did our live event. Harry and I highlighted a bunch of stocks. TGT was a short that I liked. That was before the FOMC statement. We didn't know which way the market was going to go. I still like TGT as a short. Look at how weak that stock is. So that was Wednesday's live event. Let's put up the 15-minute chart because then that'll capture Wednesday. So this is where the stock was when we were doing the live event. Look at where the stock finished, right at about the same point. Gee, Pete, that doesn't look like a very good trade. Well, if you consider what the market did after the FOMC statement from Wednesday, let's get the extended hours off of there. So there is the FOMC reaction, very bullish. And there you can see the market has rallied considerably after the FOMC statement. Target, on the other hand, has been floundering around. It is weak relative to the market. When we get into our market analysis, keep TGT on your list as a potential short. I still like it on the short side, but we're going to focus a little bit more on the long side. MMM was the long that I highlighted Wednesday. You can see this is where the live event came out Wednesday. Stock is down pretty considerably, but I still like it. And I had mentioned during the live event, it just had released earnings. And there you can see that's the earnings reaction from Tuesday. I loved this big breakout. And let's take a look at that D1 chart. Typically, after earnings announcements, we need to give the stock somewhere between 5 and 10 trading days just to settle down. But we can see these very long-term downward sloping trend lines. We'll go back and take a look. This stock has been in a very long-term downtrend and it's going to take a while to reverse that momentum. But we're starting to see signs of it. And you can see how we've broken through this horizontal resistance level. That is a high plus trend line. We've also broken through this high minus trend line. Also through horizontal resistance. Also above all the major moving averages. Also above AVWAP-E, the red line. Also relative strength. We've got all the makings for a really nice longer term long position on this stock. You can see how the option implied volatilities are down to 23. That's cheap. That means that you should be favoring buying a farther out in time. I'm talking a month, 2 months time, deep in the money option, something along the $90 calls. Go out to July, regular expiration. Those are the options I would be looking to own, provided that this stock is able to preserve AVWAP-E. Every single day that the stock is able to preserve these gains and this breakout, it becomes more attractive to me. So let's take a look at the market, see what the market did. I'd mentioned that we had the FOMC statement on Wednesday. What did the Fed say? Well, the Fed is going to be reducing their quantitative tightening. They're going to be rolling out their balance sheet. That is a form of easing. And the market really wants a rate cut, but Fed didn't signal that just yet. So from $60 billion a month down to $25 billion a month, that is injecting more liquidity into the system. So the market was relatively happy with that news. Then we had the Thursday little drop here, and we found support at Wednesday's low, and the market spent the rest of the day grinding its way back and actually finished a little bit higher than where the Fed statement came out. Okay, pretty decent news. Now, on Thursday, you can see this big gap here. On Thursday, after the close, we had the last of the mega cap tech companies announce earnings, and that was Apple. The reaction was very positive. So Apple engaged in a huge share buyback program. So even though they missed on the revenue number, the market liked the news. Bad news was priced into the stock, and the market had a nice footing before the jobs number. Well, the jobs number came out, and we had 175,000 new jobs during the month of April, and that was a Goldilocks number. Not too hot, not too cold, and the most important thing, in my opinion, was that hourly wages came in at 0.2%. They've been running higher than 0.3%. Wages are the largest input cost for manufacturers, hence higher wages is inflationary. So if the market's primary concern right now is inflation and high interest rates, this was a step in the right direction. So we had hourly wages at 0.2%, still very healthy job growth at 175,000 jobs per month. So that's why it was a Goldilocks number. You can see how the market gapped up on Friday. It did try and fill a little bit of this gap in here, and then it closed near its high. This is a very significant level because on a daily chart, you'll see that we are bumping up against AVWAP-Q and also the 50-day moving average. So now let's get into some technical analysis, do a little bit of fundamental analysis. Here's how I'm going to conclude my fundamental analysis. And here's my personal take on everything. When the market was in go-go rally mode, everybody was looking for rate cut, rate cut, rate cut. They weren't going to get one because the Fed was insistent that inflation is persistent. It is not coming down. Core inflation is not coming down. We are not going to be cutting interest rates anytime soon, and we don't need to. The economy is growing at a really nice, fast clip. GDP, 3.5%. You look at initial jobless claims. Job growth has been incredibly strong. So there was no need for the Fed to start easing. As long as those conditions were intact, I was perfectly happy supporting this type of rally. And the price action was really nice and really tight. When we did finally get this pullback, I was going to be looking for it to find instant support. And then I wanted to see these same buyers that were very, very persistent return. Stacked long green candle, stacked long green candle, stacked long green candle, attack and obliterate the 50-day moving average, obliterate AVWAP-Q, put the hurt on shorts. That's what I was looking for. That would have been my ideal situation to get long aggressively. We had earnings season coming up. We had major economic releases coming up. We had the FOMC statement coming up. So we had plenty of catalysts if we would have gotten that initial bounce to fuel that breakout and for the market to move even higher. That was my thesis. And so I was looking for a bounce, waiting for a bounce, waiting for a bounce. We did get a bounce, but look at how wimpy this bounce has been. Mixed, overlapping candles, gap up, gap down. Yes, you can say, well, look, we had a higher low above the 100-day moving average. This is nice. Hey, look at, we're trying to get through AVWAP-Q and the 50-day moving average. All that looks good technically. Here's my problem. When you start getting weaker economic conditions, that backdrop is not a good sign. When the Fed has to cut interest rates, it means that they're doing it because economic growth is starting to slow down. That's not good for corporate profits. It's certainly not good for consumer spending. So I don't like the fact that we're seeing a drop-off in economic activity. In fact, a number that came out Friday that kind of was swept under the carpet was ISM services. I view that as a very important economic release. Why? Because it's a survey, it's current. Most of the economic releases are looking back a month. If you get into the third revision to GDP, you're looking back 6 months or so. So the ISM numbers are surveys for purchasing managers, and I find them to be very forward looking. It's what their sentiment is right now and what they're feeling right now. The service sector accounts for 80% of our economic growth. So services versus ISM manufacturing is more important. Well, ISM services came in at 49.4. That is in contraction territory. It's below 50. So this is the first time that we've seen that number below 50 since December of 2022. Another sign that economic growth is slowing. And it comes on the heels of GDP declining quarter over quarter by 2%. So I'm not real keen on what I'm seeing just from an economic standpoint. We've seen the earnings reactions have been pretty dang muted. Mega cap tech stock did not rally like mad. Those stocks have been very sluggish, and although you would think that AI is the next big thing, and that's going to support the market and fuel this next move higher, now what we're hearing instead is, I don't know, AI is costing an awful lot, and we still don't know what it's going to do or how it's going to work or how these companies are actually going to monetize it. So all this excitement that we had in here is starting to wane, and we're seeing it in the price action. So how does this bear out in what I plan to do this week? Well, I still would like to see this nice breakout here through AVOAPQ. I want it to happen soon, like Monday or Tuesday or Wednesday soon. And I want to see a nice long green candle closing on its high. I want to put some pressure on shorts. And we're hearing an awful lot of clamor from the short side recently. So there are plenty of shorts. We want to put the hurt on them. And we want to see us challenge the all-time high at 525 well before the end of May. It has to happen fast. And why is speed so important? Because it shows us that one side is overwhelmingly more powerful than the other. If we just have the same kind of pattern of mixed overlapping candles and mixed overlapping candles, we're up, we're down, we're up, we're down, that is balanced trading. That tells you that one side does not have a distinct advantage over the other side. That also means that it's more difficult for us to predict price action. It's more difficult for us to do swing trades. So from a swing trading standpoint, I would be focused more on selling out of the money bullish put spreads on really strong stocks that have lots of technical support below. AA was a good example of that. If you're buying options, you want to be fairly cautious on the swing trades right now, buying those deep in the money calls. I still like that strategy, but you've only got a small starter position on right now. You are not gonzo out there looking for this breakout because we don't have evidence that it's going to happen. In fact, we have evidence kind of to the contrary that this market could be trapped in its trading range between 525 and 500 for maybe the whole summer. So just choppy horizontal trading. That means that you've got to be very selective with your swing trades, selling those out of the money bullish put spreads on stocks that have high implied volatilities, buying some calls that are deep in the money on stocks that are continuing to grind higher. That's the strategy. I'm going to give you a pick in just a few seconds here. So what do I want to see? What are my marching orders for this week? Well, as far as the economic releases that are coming out, there really aren't any big significant ones. So there's not a lot of news. We had all the news in the previous week. Earnings season is climaxed. It's going to start winding down. Not a lot of economic releases. The Fed just said everything that they're going to say. So I'm looking for a relatively quiet week in terms of news. But what I would like to see is the bad news is good news crowd. That crowd who is waiting for some type of Fed easing and Fed rate cuts. That same group who's excited to see that there's going to be less quantitative tightening, more money into the system, more liquidity. I want to see those guys excited by what they heard from the Fed this week and from the earnings announcements. And I want to see that nice long green candle in here in the next few days. So I'm going to give you a bullish pick. Actually, I might even give you two. I'm just going to go through a couple of searches real quick. I'm going to show them to you, and I will keep Target on there as a potential short. What would I need to see on the short side to want to take a position in Target? Wouldn't be swing trading it, but I would be day trading it. Ultimately, this little trend line right here that connects these lows, we need to see that breached, and we need to take out that 100-day moving average. So breach that and take this 100-day moving average out with a long red candle closing on its low, similar to that baby right there. The way that we took out that 50-day moving average right there, that is how we want to take out that 100-day moving average. We don't want to peck at it and peck at it and peck at it. We want to obliterate it. I don't think we're going to see that because this support is showing pretty good signs in here. It's going to take an economic release. It's going to take an event of some type to really cast that dark cloud over the market to get that type of price action. So I'm not looking for it. I don't believe we're going to see that. But if it does happen, you'll have TGT to lean on. And I'm just going to put up another stock that I was noticing. Uber also looks pretty weak to me. And there you can see Uber, nice steady selling pressure, relative weakness. Okay, this stock actually has high option implied volatilities. It announces on 5/8, so there are only a couple of days left before earnings. So you can discount Uber, but here's why I would have liked it if it didn't have earnings so close by, is you've got your relative weakness, the stock's continuing to sell off, you had a decent market rally, the stock has not been able to get through the 200-day moving average, so that tells me that that resistance is still intact and that this relative weakness, with any kind of market weakness, the stock would continue to drift lower. So scratch Uber, focus on Target. If you get that negative price action on the SPY, not looking for it. We're going to go into a bullish search. We're going to take a look at Green Royal Flush. I could go through every one of these stocks and they all look good. Nvidia, yeah, I kind of like Nvidia. Nvidia's coming up on earnings, 522. You can see this downward sloping trend line right here. It's above AVWAP-E. It's above the 50-day moving average. I do like Nvidia. I'd make a case for getting long Nvidia. I like TSM. TSM also has this downward sloping trend line, breakout to the upside above the 50-day moving average, above AVWAP-E. They've announced earnings. The cat is out of the bag. I don't have that with Nvidia. What TSM said was that they had a great quarter and they are expecting 30% revenue growth this upcoming quarter. So they raised guidance. I like that. And you can also see that when the market pulled back sharply last week, the stock held up very well. TSM is your bullish pick. You can see here that the historical implied volatility is 34. That tells you that you can go out in time. You can go out into the July expiration. I'm not even going to highlight any strike prices. Deep in the money, delta of 0.7, 2 months out, go into the July expiration, go into the June expiration. I'd prefer the July. Start looking at the 135s, maybe the 130s even. Those would be your options. You're looking to take a surrogate stock position here and for the stock to simply grind higher. So I really like that one. And I had noticed Costco. I do like Costco as well. I'm not going to highlight it in terms of it being my pick, but I'll show you what I liked about it. Can't recall which search it came out on. Hover over the E. Earnings on 5/30, so you still got a few weeks. I like this price compression here. I like the fact that the stock has been able to get above the 50-day moving average and AVWAP-E. Lots of support below. Not a lot of option implied volatility. Only an IV of 20. Makes it difficult to sell an out of the money bullish put spread, so I would not be favoring that. On any kind of little dip, though, I think that if you're able to buy some in-the-money calls with a high delta, again, I think this stock continues to grind through. I'd like to also have an alert set at this horizontal resistance so that if the stock is able to get through it, then I like it even more because it's got plenty of room to run up to that previous high. So I think Costco looks interesting. It looks good. It had some nice volume on Friday. You can see how it's poking up. Good relative strength in here. Market pulling back. Stock has been able to hold its own. Those are all really good signs. M5, nice steady price action. Good volume Friday. You can see right there the blue lines above zero. That's our 1 vol indicator. So yes, Costco looks good also. Final look at TSM because that is the only stock that I am going to be highlighting come Wednesday during a live event. And we'll take a look at the price action. You can see the nice big volume during the course of the day. Stock gaps up, holds its gains the entire day. Really like that one. By the way, please make sure to click the subscribe button. The more followers I have on YouTube, the more notice my channel gets. I'm trying to educate as many of you as I possibly can. Also, please make sure to attend the live events. Harry and I do those Wednesdays, in the middle of the day. Even if you're not able to attend, make sure to watch a recording. We're answering your questions, so there's a really good chance that the same questions that you have, we're going to answer during those live events. And of course, we're going to show you lots of great trades that are setting up. Thanks so much for watching, everyone. Have a great weekend. Good luck with your trading. We will see you Wednesday.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.